Hi everyone, so welcome to my single values. So today I want to embark on a challenge where I'm going to start like a beginner investor and I'm going to invest small increments into a company, and if I'm right that this company that I'm investing in will grow over time, then I'm going to be rewarded, right? So it's kind of like taking the approach of index investing, where you basically put your money in an index and you do it really consistently, and that's just proven to work really well over time. But I want to take it to a new level, and I want to choose a high growth company that I know will be much more valuable than it is today. Even though right now Tesla feels like it's highly valued, even Elon Musk agrees. But the thing is, in the future, it's going to be so much more valuable. So if we know that a company is going to be valuable, but it's expensive, what do? Well, we kind of take that whole approach of an index, right? So it's kind of like looking at an index right now. It could be really high, but it doesn't matter. You just continue to buy it, and each time it comes down lower, you still buy it, and when it goes up higher, you still buy it, because it doesn't matter. It just takes like a systematic approach to a company that you believe will generate a lot of value, or in the index case, it only accrues companies that generate value, because when they don't generate value, they get kicked out, and when they do generate value, they get put back in, or vice versa. So the whole idea of an index is you always got your most valuable companies being put together, and hence why index investing has been really popular and has done really well for a lot of people over time. So my kind of approach today is I'm going to look at index investing approach, but I'm going to choose a stock that I like, but that I just think is selling at such a high premium, but I also think that it's going to do really well in the future. You could do this too. You don't have to do like what I've chosen here. I've chosen Tesla, and I'm going to do $100 increments every week. And in regardless of the pricing, I'm going to buy it regardless. So I've taken the liberty of buying $100 of Tesla today. It's already at $99, but for me, since I'm taking this systematic approach and it's at such a small increment, that I actually do not feel bad or good or anything about this. I feel like this is my approach, and I'm just going to do this non-stop for maybe at least 12 months. And then we can see how this approach goes, and then I think it's a good way to do it as well, because what I've always done is I've always chosen stocks and looked at the price. If it was undervalued, I just bought it all at once, which may or may not be a good approach sometimes. So I think it's always important that you can find an approach that takes the emotion out of the decision making. The minute your emotions come in, it kind of makes it really tricky to make decisions in a very quick and precise way. So you really want to step back, take a systematic approach, and go, if I invest this way, regardless of what happens, I'm just going to continue doing it. So I think this will work, because particularly with it particularly works with index investing, of course, because you've got such a diverse base of companies. But I also want to try it with, say, a company, which a lot of us don't do it, because we consider this approach. Like, most people starting go into index investing, and then that really works well for them. And then the minute they start picking their own stocks, they're picking between the pricing. So all of a sudden you go from a really solid approach when it comes to index investing, and then it suddenly just disappears the minute you start picking your own stocks. So I want to bring that index investing approach, and I really want to just bring it to a stock that I really like, and then track it over time. And I think it's really good, particularly if you're a beginner. You can also, you can choose small increments. So you don't have to do $100. You can even do $50 or even $20. Or if you really want to do more than that, you can do $200, whatever your flexibility is. But you're going to make sure you can do it consistently, right? So for me, I'm choosing $100 because it's just like one of the really nice round numbers to work with. And I think a lot of people could probably save $100 every week if they can. And I think If you put into the stock market, buy a company that you like a lot, but that is also producing a lot of value. We know that Tesla's got multiple gigafactories being built right now. It's scaling to a 500,000 cars this year, and I think next year they could get well to up to 1 million cars in production next year. And they've got a plan that they want to get to 10 million cars. So for me, that as a great aspiration, this is a company that really wants to build value going forward. And for me, if I invest in it consistently, I think I'll be well rewarded. But we'll have to see, of course, because we do not know how this turns out. We know it works with index investing, but the big question is, will it work for one stock, particularly one that's in a high growth area? Because a lot of people do it with blue chip stocks, or that pay dividends, so they can kind of see the return coming in and out. But I think this approach works well as well with stocks that are very volatile. It's also producing value, even though they're volatile. The price goes up, the price goes down. It kind of averages out, but over time, the value itself continues to increase because the company is building more value into itself as time goes. So I think I want to give this a try, and I want to start from a beginner, and I also want to go through that same journey that you will go through. Particularly if you're starting off investing and you don't know where to go, particularly when it comes to picking your own stocks, you don't know what pricing is good for you. So I want to take an approach where pricing doesn't matter anymore. Pricing doesn't matter. That's kind of weird, right? Where you go, oh, pricing doesn't matter. As long as the company is a good company and it consistently increases in value, then, I think it reflects it in the stock value over time, that if this company is a high growth company, even if you pay a premium today, tomorrow it will increase, or in a year's time it will increase. Eventually it will show up. So I think that's the kind of thing that you really, really want to pay attention to, that, hey, it's not about having to always pick the right price, because sometimes it's difficult. Sometimes timing is incredibly difficult. As a lot of investors can attest to, timing is one of the most incredibly difficult things to get right, because you buy it today when it drops a lot, and you want to put all your money in, and then it continues dropping and you don't have any money to average down, which is the worst thing you can actually face. And I've faced that so many times. So I really want to try this approach and go, is there a better way to do things where it takes the stress out, takes the emotion out, and I just consistently invest a set amount every week, and then see if I actually end up doing well out of it, right? Because your first thought is, wouldn't you want to just buy it when it's cheaper? That's quite intuitive, the whole cliche of buy low, sell high, right? But we can never know what is low and what is high, and particularly with a stock like Tesla right now that's selling at a premium, and we never know when it's actually going to sell low, right? I've been through that situation where stocks sell at a premium and they never sell lower. I think the best example was Amazon. When I first started investing, Amazon was so cheap, yet I always thought it was a premium, so I never bought into Amazon. But if I actually took a different approach, where I go, Amazon is producing so much value that I should actually buy into it, and I shouldn't care that it's selling at a premium. I shouldn't be so detailed. A guy like me just looks at a stock and I analyze it to the core of those details, and I actually end up looking at it and I go, it's selling at a premium. I don't really want to pay a premium, so I'm not going to buy it. And that can actually be a really bad so I really want to change that. I really want to take a new approach, and hence why I'm having this Tesla challenge, at least to myself. And in this way you can actually watch me with this and go, hey, when you buy like this, you actually take a lot of time out of the decision making, because you know what stock you want to buy, and you just buy it every week consistently, and you don't actually have to spend that much time doing that much research, because the whole overall goal is, if the value is going from here to here, it doesn't matter what happens. Everything else is a fluctuation. Everything else is just volatility. It's noise. That doesn't matter. And as Buffett, it's like taking a Buffett approach where a company is great, so it doesn't matter, what happens in between. It just matters how you start and how you finish. And that's what I really want to prove. I really want to prove that this approach can work, and if it works, I want to do this more, because one day I'm going to go, I don't want to spend that much time on investing, so I'm going to do something different. I'm going to go do something else, and I'm just going to do a systematic approach where every week I invest a certain increment into this company, regardless of the price. And yeah, I can just do whatever I want, and it's going to generate me a good return. Because the one thing that I like about really high growth companies is, like, they continue to generate so much value that it doesn't matter what price you buy in the short term, because in the long term you're just going to get really, really well rewarded. And that's what a lot of people investing fail to see, that buying for long term rewards you in such a superior way, as Warren Buffett would prove, right? So like, if you have any questions, post below, or any comments. Always interested to hear what your thoughts are, particularly about doing something like this. Until then, good luck investing, everyone.